Today we're going to talk about annuity timing. Should you jump in or wait?
Well, that's the big question. Do we jump in or do we wait? And that's the question we hear all the time.
Well, we're hearing it a lot, especially even with people we're working with in the last couple weeks, because things are changing.
Yes.
The market's changing.
Right.
Now,
well,
why is the market changing?
Well, I think it has something to do with the government forcing these interest rates down a little
Uncle
bit.
Ben, are you doing it to us again?
These treasuries are setting new records
on the downside.
On the downside, literally daily, and so this is really making a difference and putting a lot of pressure on the annuity companies and obviously banking instruments too to lower rates dramatically.
Right. I mean, we look at what's happened. And I'm going to blame Europe because they're not here. You know, they're not in the room with us. But the pressures of what's happening with Greece and Spain and the euro and the flight to safety has been the flight to the United States.
Right.
Bring us all your dollars, your euros, your yen. We'll take them all.
It's
and
like
it's pushing down the Fed.
Yes. Yes.
The 10-year Treasury it's down 25% from the beginning just a couple months ago.
So. Right. So the big question gets down to: do we jump in and do an annuity now for timing issues, or do we wait for these rates to increase? And just recently, I mean, Bernanke has indicated that we're likely to see this low rate environment for 3 to 5 years, and it wasn't very long ago he was talking about the next year or two.
Yeah, it started out, it was going to be, when they started making these announcements of telling us, giving us the information of how long they were going to, it was at 2013. Then it became 2014. And this latest statement is, well, 2015.
Right,
So now we're in a guaranteed, I don't want to say a guaranteed low rate environment, but...
So how long do we wait for retirement? How long do we wait for these rates to change? Retirement isn't always a choice. I mean, there's a lot of reasons why we retire, and sometimes we just need to make that decision because we need the income or we need the safety of the money. There's many reasons that we would move some money into an annuity.
Right, and I think that's the key. Why are you putting money into the annuity? If you're needing income and you don't want to have that worry about outliving your money, that's where the strength of the annuity still lies. Now, are we seeing annuity companies start to pull benefits off the table?
Last week we had, 3 or 4 of them, major companies start to pull back, and yesterday maybe we were notified again of...
I've seen 2 today of companies that have made announcements that within the next week to 2 weeks they are reducing their benefits.
Right. And how many people have we met with over the past year or two that said they were going to wait for things to go up?
Yes. I can remember 2 years ago when, oh my gosh, it was at 4.5% in the caps, and they were like, it's going to go up to 5. I'm going to wait till it's at 5.
Right.
Right now, people would kill for 4.5%.
5%. Right.
So it's trying to predict the market on that side. You can't do it unless if you've got a crystal ball. Now, what we've got though is we've got guarantees of the Fed.
Yes.
Guarantees. That's probably not a guarantee that I want to bank on.
I was going to roll with you on the guarantees. I was going a different way.
Prediction by the Fed that basically, hey, we're going to keep rates at a low level. So, is the timing wise? Do we wait? Well, if it's income,
then we should not wait, because the guarantees that are offered right now on annuities for this income account, for the roll-up to create a larger income in deferral is still excellent, and it's about to take another step back.
Right.
So
it's still better than what you'll get in other areas sometimes. But the annuities excel right now with income.
Yes.
Guaranteeing a roll-up and deferral. Those are the pieces that really are superior, the lifetime income benefits versus some of the other pieces.
And if you need immediate income, there is the possibility of using a hybrid that has some type of an inflation hedge, or using an immediate annuity that has a guaranteed cost of living adjustment. So there's no reason not to consider going forward, if it's that time to retire with immediate income, or putting money aside for deferred income, because this is where the annuities really do shine.
Exactly. All right. Now, so if I wanted to buy an annuity for growth, So I'm trying to get the most bang for my buck in the sense of
Right,
return.
right.
Should I still buy an annuity now, or,
Well-
should I consider other alternatives?
Yeah, I'd like to, we have a bridge to nowhere, and we have an annuity in a package deal right now. No, Eric, I say if you want growth, we really have to think outside of the box. And I think that we can still utilize safe money vehicles and use insurance companies for this. But I think that we need to be looking at more like the secondary annuities. These would be like pre-owned or pre-issued annuities. And you can find yields all over the internet.
Pre-owned, is that like buying a pre-owned car? You know, a pre-owned annuity,
It's certified.
it's
Actually, it is certified by the court. They're court ordered. So they're very, very safe. It's backed by the insurance company or the annuity company, the same as a standard annuity. Someone actually bought an annuity, decided for whatever reason they did not need this annuity, and they sold it on the secondary market. And so by doing that, it can create a much higher yield. So we've been able to help different ones with yields in the neighborhood of maybe between 5 and 6%. However, right now, you see on the internet, you see advertised a lot, if you know where to look, somewhere in that 4 to 5% range. So it just depends on the source and, the source that you have, for these annuities. So another one would be that you could get growth. What would be another area?
Well, I was going to say, sticking with the same type of similar platform, life insurance, in the sense of you've got life settlements. Now, life settlements are a little bit more unique in the sense of you're buying life insurance that somebody decided they didn't need. Usually it's someone purchased it and it was for a spouse, and the spouse predeceased them, and so they have a life policy
they no longer need.
Right, and so there's more benefit to them by actually selling it on the secondary market than cashing it out sometimes.
Right.
So
you're going to get paid out on that, and it's guaranteed by the insurance company that's behind it. So it's relatively safe, very safe actually.
You're basically buying, and usually a group of people are buying the premium, you're paying the premium in exchange for the death benefit. So you don't necessarily always know when.
You never know what's going to pass.
The people that underwrite these basically go in and they calculate, look at
their life expectancy.
Usually they try to time it to 3, 4, 5 years, so you expect it to happen, but you can't guarantee it.
Right.
You're putting this down knowing you're going to get this. You just don't know how long.
So you always know that you're going to have an increase in the money. You just don't know what the percentage of the yield will be based on the timing.
Right. You know you're going to get a death benefit. You just don't know when it's coming.
Yeah.
So
yeah.
Now you've also gotten another life insurance product. You've got your indexed life
index life.
Now your caps there
Right.
have not been impacted nearly to the extent
No.
that the annuities have. You're still looking at caps
12%,
14,
14%, and they've held up all through the whole financial crisis. So that's again not for everyone, but it is an area where if you've got the right scenario, the right situation, you can have pretty darn good growth on that. You do have to pass a medical audit.
Right. You have to be insurable.
Yeah. Right.
Or
right.
know somebody that's
know somebody that's insurable. Right.
So.
Right. So that's thinking outside of the box a little bit.
Yeah. There's alternatives out there, safe money alternatives.
If you want to earn somewhere in that 5 to maybe 7% range, and even in some cases it can go into the double digits, but we're trying to be a little bit more conservative.
We're by nature conservative.
Under what do we call that? Under promise,
understate,
over deliver.
That's right.
So back to our. Did you have a point you were wanting to hit there on something?
No.
Okay.
I was looking at the article that we had kind of stimulated the topic for today, and talking about the changes in what's going on in the annuity market,
the annuity world out there.
And you're seeing a lot more of the purchases on the indexed annuity side. And I didn't know if we were ready for the summary statement in the sense, but it's basically looking at the changes, and there's a lot more people purchasing indexed annuities.
Right.
And it's
which are considered the hybrid annuity.
Right.
So the fixed indexed annuity.
And we think of that. We like to personally think we're responsible for the increases in the market, but in all likelihood, probably not.
We're rising the tide across the nation with.
And it's because of the income riders, the ability for guaranteed income in retirement, And then you also have basically a safety of principal
Yes,
and a hope for gain.
right,
So
right, right. So you put all those factors together and compare the hybrid annuity or the indexed annuity to just a standard fixed annuity or the variable annuity. And what we've seen is a great increase in the overall rate of sale of the indexed annuity and hybrid annuity, and a decrease in the fixed annuity, which is paying very low rates right now, and also in the variable annuity, which introduces the market risk factor.
Right.
So,
So people are agreeing with us more and more that
Yeah.
they see the benefits of safety of principal
yes,
and guarantees, either whether it be through just the guarantee of not losing principal or also increases in income.
right, right. Well, I think we need to sum it up with, is this a good time to jump in?
Yes and no.
Sounds like me now. Excuse me.
So if your timing is that you're needing income, annuity,
Excuse me.
if you're wanting growth, there are vehicles out there that we would encourage you to look at.
And if you're wanting income, it's a definite that a portion of your portfolio can go towards an annuity, and the timing is probably better to move than to wait,
Yeah. If you're retiring now, you have,
or in the near future.
yeah, as you say,
Yeah, yeah,
you really probably don't
yeah.
have time to wait.
Yeah, yeah. So that's it for today, folks. Thank you for spending time with us.
You have a great day.